Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Yangtze Optical Fibre and Cable Joint Stock Limited Company Annual Report. Yangtze Optical Fibre and Cable Joint Stock Limited Company offers a diverse range of products and services that cater to various industries. At the core of their offerings are optical fiber preforms, rods, and cables, which are used for communication purposes. The company also provides cutting-edge products such as specialty fibers, optical components and modules, as well as optical assemblies and modules. In addition to these products, Yangtze Optical Fibre and Cable Joint Stock Limited Company offers a range of cable products, including submarine fiber optic cables, coaxial cables, and accessories for RF and leaky coaxial cables. The company's product portfolio also includes optical transceivers, which enable efficient data transmission. The company provides solutions for various markets, including telecom, data communication, transportation, industrial laser, power grid, submarine communication, consumer and materials. Furthermore, Yangtze Optical Fibre and Cable Joint Stock Limited Company offers data center, copper structured, and fiber optic structured cabling solutions to meet the needs of its clients. Overall, the company's product and service offerings are designed to cater to a wide range of industries and applications, making it a leading player in the optical fiber and cable market. Yangtze Optical Fibre and Cable Joint Stock Limited Company market capitalization of $269 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Yangtze Optical Fibre and Cable Joint Stock Limited Company holds a significant advantage in their industry. Yangtze Optical Fibre and Cable Joint Stock Limited Company trades at a higher price-to-earnings ratio of 156 times and a higher price-to-book ratio of 9.27 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 51% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually even though operating income have been improving. Although the drop in revenue is concerning, we can tell that management have been able to reduce cost. The primary drivers of revenue growth and decline are multifaceted. On the growth side, overseas markets have been a significant contributor, with a 47.8% increase in revenue. The optical communication products segment has also seen substantial growth, reaching $8.35 billion. Additionally, improvements in production efficiency, product mix enhancements, and increased demand for new types of optical fiber and cable have all contributed to revenue growth. Furthermore, the growth of generative artificial intelligence and the expansion into new regions, such as Indonesia, have also driven revenue growth. The company's strengthening global footprint through international operations has also been a key driver of growth. On the other hand, domestic business has seen a decline in revenue, with a 10.4% decrease. Investment losses have increased by 28.1%, and interest revenue has decreased by 16.3%. A cyclical downturn in the international telecommunications industry has led to decreased demand for standard single-mode fiber products, contributing to revenue decline. These factors highlight the complexities of revenue growth and decline, with multiple drivers at play. Net income and profit margins. A year of growth, the net income of the company experienced a significant increase, rising by approximately 20.4% to Rm 813.7 million. This growth was also reflected in the comparison between 2024 and 2025, where net income increased by 52%. The dollar equivalent of net income also saw an increase of 17.1% to $14,252,103,033. The profit margins of the company also underwent a notable transformation. The gross profit margin rose from 27.3% to 30.7%, while the operating profit margin increased from 6.3% to 7.8%. Furthermore, the net profit margin saw an increase from 7.2% to 9.1%. The reasons behind these changes can be attributed to several factors. The company's operating income from external transactions experienced a significant boost, contributing to the overall growth in net income. Additionally, a decrease in intersegment revenue and an increase in non-operating income also played a crucial role in this transformation. Overall, the data suggests that the company has made substantial strides in improving its financial performance, with notable increases in both net income and profit margins. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided information, the cash generated from operations is $419,111,119, which is a significant positive amount. Furthermore, on page 36, it is stated that the net cash generated from operating activities for 2025 is RMB 3,652.9 million, also indicating a positive outcome. This suggests that the company's core business operations are generating sufficient cash to cover its expenses and investments, resulting in a positive operating cash flow. This is a crucial indicator of a company's financial health, as it shows that the business is capable of meeting its short-term obligations and investing in growth opportunities. The company's debt level has undergone a significant transformation over time. A notable decrease in gearing ratio from 41.4% to 20.8% indicates a substantial reduction in debt levels. This suggests that the company has made efforts to manage its debt and improve its financial health. However, despite this improvement in debt levels, interest expenses have seen a considerable increase. Interest on lease liabilities has risen by a staggering 130.6%, while total financial expenses have increased by 38.1% and 37.7%. This indicates that the company is now paying more for its debts, which may offset some of the benefits gained from reducing its debt levels. The company's performance can be analyzed by examining the segments and regions that performed well or poorly. On the positive side, the optical communication products segment generated a significant profit of $3,113,559,004. The optical transmission components segment also showed impressive growth, with an annual rate of 48.6%. Additionally, the marine energy and engineering field saw success with a project signed for offshore wind power development, while the high-purity quartz materials field completed a research and industrialization project and secured key customers. The company's performance was not uniform across all segments, however. The optical communication products segment also incurred losses from investment in associates and joint ventures, amounting to $302,577,475. Similarly, the optical transmission components segment suffered credit losses of $142,255,936. Furthermore, the unallocated segments, others, reported an operating loss of $2,748,869,211, while the offset between segments resulted in a loss of $328,134,156. These poor performances highlight areas where the company needs to improve and optimize its operations. Management is optimistic about the company's future prospects, citing a positive outlook driven by the growing demand for global telecom infrastructure. This trend is fueled by the increasing adoption of smart devices, high-definition video content, and artificial intelligence. As a result, the company plans to invest in cutting-edge technologies such as next-generation optical fiber networks with ultra-low loss and latency. These investments are aimed at supporting the growth of computing power infrastructure, positioning the company for continued success in an expanding market. Concerns about inventory buildup and supply chain disruption have been raised in recent assessments. Inventory levels are a concern, as is the potential for inefficiencies in internal sales processes. Furthermore, signs of potential supply chain disruptions have emerged due to rising raw material costs and manufacturing overheads/direct labor costs. The impact of these rising costs is significant, with raw materials increasing by 8.3% and manufacturing overheads/direct labor costs rising by 21.4%. These increases pose a threat to the stability of supply chains, potentially leading to disruptions in the future. That concludes the financial summary for Yangtze Optical Fibre and Cable Joint Stock Limited Company. Feel free to comment below, and I will be happy to answer them when possible.